Investment advisory services offered through SWAN-Capital Management, LLC, a SEC-registered investment advisor. SWAN-Capital Management, LLC, and SWAN-Capital are independent entities.
What your money would say. Andrew McNair. Money Talks. Are you listening? Money Talks. Are you listening? Money Talks. Are you listening? What your money would say with Andrew McNair.
We're live here on What Your Money Would Say. I'm your host, Andrew McNair, and for the next 30 minutes every Saturday from 12:30 to 1 o'clock here on WCOA 1370, I will be your retirement resource. My goal and my passion with What Your Money Would Say is to take the financial chickens and make them swans. Because I believe in what SWAN stands for. That's why I named my wealth management firm SWAN-Capital. Because as a retiree, you deserve to sleep well at night. And you should go from being a financial chicken, worrying about, am I going to run out of money in retirement? What is the stock market doing? How is April 15th going to affect me? To retiring gracefully like a swan, where you sleep well at night. And you deserve that because you've worked your entire life to get to this point. In today's show, we're going to be laser focused on an asset class that sometimes goes unlooked upon, which is real estate. And I'm going to bring on an expert, Justin Beck from Beck Properties, and we're going to talk about the real estate market and how as an investor you should take a second look at it. Now, before we do that, I want to share with you some upcoming events we have here at SWAN-Capital. The first one is our Social Security 101 class, where we kind of peel back the onion on Social Security benefits. We're going to look at the birth and design of Social Security. We're going to look at what's the future of Social Security. So many people are worried, is it going to be there for me? We're going to answer that in that college class at UWF. We're also going to talk about when to take Social Security. Do you take it at 62, 66, or 70? How do you maximize benefits and leverage the rules of Social Security in your favor? Also, we have some classes coming up on veterans benefits. And this following week, we have one at Homestead Village. We're going to talk about veterans benefits that help pay up to $24,000 a year to our veterans that served during a wartime and help pay for their assisted living, nursing home, and home health care expenses so they retire with dignity. We also have one at Westminster Village in Spanish Fort on August 7th on a Wednesday around noon. If you want to check out any of those dates for our Social Security benefits classes or our Veterans Benefits workshops, go to swan-capital.com and check out our upcoming events tab and get RSVP'd. And while you're there, like us on Facebook, follow us on Twitter, and sign up for our weekly update so you can stay atop of the market. Now, I want to introduce you to Justin Beck. You might have saw him in the Pensacola News Journal recently as some of the up-and-coming under the 30s, right, Justin?
Oh, not quite. Maybe under 40s.
Under 40s? Yeah. Well, welcome to the show, Justin.
Thanks, Andrew. Thanks for having me.
Well, I want to bring on someone that really understands the real estate market, not only nationally, but here in Pensacola. Someone that knows what, as a retiring business owner, or as just a retiree, understands what the real estate market is doing and potentially what can happen in the future. So, Justin, will you start off and share with us a little bit about yourself?
Yeah, I'd be happy to. Like I said, my name's Justin Beck. Thanks, Andrew, for having me on. I am proud to lead Beck Property Company. We're a commercial real estate services firm. We're based here in Pensacola, and we service the Pensacola area, but we also service the whole southeastern region. We focus a lot on office and retail and light industrial type properties. We also do property management, and we also what I call principal investing. We invest ourselves in real estate along with partners.
So you just don't sell and buy real estate for people. You actually buy, when you say principal investing, that means you actually invest in real estate for yourself. So you're an investor yourself.
Yeah, absolutely. We like to think ourselves as more like partners with our clients. So obviously, if you have something that you need help on, we'll help you do it as a service. But a lot of times we'll partner with our clients on purchasing properties so that we're, all of our interests are aligned, and we really like to do that. We like to be focused on becoming partners with our clients. So.
That's fantastic.
Yeah.
If you're just tuning in and What Your Money Would Say, we have Justin Beck from Beck Properties, and we're talking about real estate. And as you know, as if you heard his bio, he's got real estate in his blood. So you want to tune into this week's show and find out what's going on in the national real estate market. What are some factors that, as anyone that owns real estate out there, should be looking at?
Sure. Well, I think it's safe to say that the glass is clearly half full now. This recovery is taking, which is positive, albeit it's not happening quite as fast as we'd like to. But the major thing that we look for in our business is that unemployment rate. We want to see job growth. We want to see unemployment go down. That means people are going to be back to work. They're going to be shopping. They're going to be buying things, which is great for retail. They're going to be occupying office space, which is great for our office sector, and as well as the industrial market, shipping goods to back and forth. So that's the major thing. We also watch that interest rate, which is really large because that's going to affect how much money is available in the marketplace.
And interest rates have been kind of volatile. They've jumped really recently.
Yeah, I mean, that's something that we've been expecting to see for a while now, and it finally happened. But, it really has not deterred the real estate market too much.
Well, it's still at historic lows.
Absolutely.
We talked about this a few weeks back, is if the Fed keeps on pushing down interest rates artificially, what you do have is a spring. So you can expect some of these big pops in interest rates as they continue trying to push it down and keep interest rates low. Now, going back to employment numbers, that really affects the commercial market. Now, we're seeing some good job growth in local Pensacola with the Vision 2015.
That absolutely already exceeded the goals, and we're happy. Our firm's a member of that 2015 Vision, and so fantastic job growth here in the Pensacola area, and I expect to see more. Frankly, there's a lot of great stuff happening in Pensacola. So even if the national job scene isn't exactly where we want it to, we hope that Pensacola, and I believe Pensacola, is going to outpace the national job growth.
And what's nice is we got key people, business owners and families that want Pensacola to grow. When we had Ashton Hayward on a few weeks back, you could hear the passion of the people in Pensacola that want this town to grow, and that's what brings businesses in. So let's move on to the prices. So how is prices looking real estate wise? We see them increasing.
Sure. If it's tough to say prices are increasing just across the board. I would like to look at each sector individually because take for instance raw land. I think raw land values are still pretty flat. There's just a glut of raw land on the market right now.
Sure, especially in cantonment area, the more rural places.
Absolutely, where there's plenty of land available and those prices are kind of stable. But if you take the investment side, whether it be single-tenant net lease properties, think of a Walgreens or a Dollar General, Family Dollar, those sort of properties, really hot. I have an investor client that classified it as ravenous. It was so active, and prices are just continually going up there.
Which is great news for the retiring business owners. We've a lot of business owners, and again, this is why it's so key on having a retirement plan that's not so tied to the market and individual factors. Because a lot of retiring business owners had to wait for this market to recap, and now since it's starting to heat back up, it might be a time to kind of pull the chips off the table.
Yeah, I think it could be. If you've got income producing real estate, I think it is a great time to look at selling. If you've got a commercial property that you've been occupying as a user, if you're a business owner, and maybe looking to make some moves, take that money out of the market, now's a good time. There's demand. There's very limited supply in Pensacola, specifically in Pensacola. Other markets that surrounding our areas, be it Mobile or Tallahassee, they have a lot higher vacancy rates than we do. So. As a real estate broker, we struggle to find good spaces, or whether it be lease or buy for our clients right now. So
that's good.
Yeah, it is.
Now, what about foreclosures and real estate owned properties? Are we seeing most of that being already exempt? Are we still expect a lot more coming out? I
think we've passed the big boom of foreclosed properties. There's still going to be some steady flow for the next few years, I think. But that massive tidal wave of foreclosed properties that actually people thought was going to be a lot bigger than it was on the commercial side ended up not being that big. But there's still some on the market. There's still going to be some. It's going to be kind of a normal
leaking them out.
Yeah, but for the most part, those have been flushed out of the market. So we're back to arm's length transactions now.
Okay.
Yeah.
Now, with macroeconomically, as a big picture, if you can, for some listeners, compare the difference between, commercial real estate and residential real estate and what trends to expect there.
Sure. Well, in general, I would say that residential leads the commercial market. And if you just think about, physically speaking, when you see a new subdivision come in, those rooftops get there first. And then they'll build the shopping center, and then they build the office buildings. Well, the national market and any market is like that too. The housing leads the commercial market. So right now, from what I understand, talking to my colleagues in the residential side, it's a really active market. Prices are going up, supply is limited, and commercial, although it's improving, is lagging behind that a little bit. And so I expect in a year or two that we're really going to see some strong activity in the commercial side.
Which is great to know, again, if you're a retiring business owner out there, that if residential is booming as it is right now and inventory is shrinking so fast, you can expect 6 months, year to 2 years from now, the commercial side is going to be doing that. So it's a really good foreshadowing of what the commercial market may be doing in the next year or two.
Yeah.
Now, I want to shift focus. Now, you've been doing this for a long time, Justin. Now, for a buyer or seller out there, what are some good tips on the buyer side so they can get the best deal and the best bang for their buck?
Sure. Well, it's just like your business. I mean, rule number one, at least from my perspective, is go out there and hire a good professional.
Absolutely.
That can advise you. Information technology, the information that's out there, sure, you could find the information that you're looking for if you want to spend all that time kind of trying to dig through it and sort it out and understand that information. But why would you do that? Why not hire a professional that can really sort through it and understand or help you understand the market? So I think the first thing is to hire a professional. And the second thing is to get prepared before you go to market. If you're a buyer, make sure that you're qualified, make sure that you have a lender that can help you if you need to borrow money. That's a great tool to have there, is just to be prepared to pull the trigger when you go to market. Hire that professional, and they can help you with the lender as well. And really try to understand what it is you need. Spend that time understanding what it is you need.
Not just rushing into a deal.
Absolutely, and that means the size of the building. That means the look of the building, if it's a building, and the location. We have clients, and it's kind of funny because they'll need a 2,000 or 3,000 square foot building, and they don't know if they want to be north of 9 Mile Road or if they want to be downtown sometimes. And you think you kind of laugh, but that's the honest truth. And so we'll say, let's sit down and really let's think about this.
What's your needs
before we spend 3 days driving around all creation looking at buildings. Let's understand where you really want to be. So,
and that's the value of having a professional. There's some things that you can do it yourself. But there's a lot of things that you need in preparation. When it comes to financial planning or looking for a commercial building, you need someone to step back and give you an outsider's perspective. Yeah, you could probably find the cheapest mutual fund and see how that rides. You could probably try to save some bucks and try to find the commercial real property that will fit your needs. But you might miss something that a professional has that value to bring to the table. On the seller side, is there any advice you have them to look for?
Yeah, I mean, rule number one's the same on the seller side as well, but have a really, most important thing is have a real good, honest understanding of the value. If you're a seller of your property value, I think that's really important. Take your time. If you're going to interview brokers to sell your property, I think that's a great idea. We love it when we know that we're being interviewed by a seller who's talking to several brokers, because they're going to have a comfort level and they're going to know if it works both sides. From a relationship standpoint, we like to have a good relationship with our sellers. So
you brought up a really good point, is interviewing, and that goes for any field. When you're interviewing your doctor, your financial advisor, or your broker for real estate, is what are some questions you would ask? If you were the buyer or the seller and you're looking for a professional like yourself, Justin, what are some questions you would ask that broker?
Yeah, sometimes the first question we get is, how much do you charge? And we're happy to tell you how much we charge, but I think that's a piece of the puzzle.
Yeah.
I think it's important to meet with somebody face to face and see if you get along with them.
Right.
See if they're
make sure your personalities.
Yeah. See if they're an expert in the property that you have. Pensacola market is is not quite large enough for me to specialize specifically in Class A office space downtown. I have to do some I have to do some retail, I have to do some office, but I don't do multifamily. I have some folks in our office that do that. So if you're going to talk to me and you have an apartment to sell, I'm going to say, well, listen, I have somebody else in my office that does a much better job at that than I do. So make sure that they understand your property type and really know the market. They should know which properties are selling, who's the buyers, and who's the sellers.
And they have the expertise in that market.
Absolutely. Yeah, they need to know why your property's good and why it's bad, why it's going to be easy to sell.
Especially if you're selling it, you got to, here are the key benefits. A lot of times we overlook that, but if you're in that market all the day and that's your expertise, is you know what the buyers are looking for, so you can highlight the main things that they're looking for that sell.
Absolutely.
Now we're going to be right back. We're going to take a commercial break, but we'll be right back.
What your money would say. Today's financial landscape can be rough. One of the most important aspects of planning is choosing the right guide to help you navigate the road to retirement. Andrew McNair and the team at SWAN-Capital is dedicated to providing the very best service in the retirement planning industry today. SWAN-Capital is a full-service independent wealth management firm dedicated to providing guaranteed custom income plans that you cannot outlive. Contact Andrew McNair at SWAN-Capital 850-380-9558. That's 850-380-9558. The difference between SWAN-Capital and you retire once. We help people retire every day. You should be enjoying your retirement years, not letting worry keep you up at night. SWAN-Capital. Sleep well at night. Contact Andrew McNair at SWAN-Capital 850-380-9558. That's 850-380-9558. Again, that's 850-380-9558.
The Veteran Benefit Project, founded by Andrew McNair, president of SWAN-Capital, is a nonprofit organization dedicated to helping veterans and widows of veterans with long-term care expenses by qualifying for the VA's Aid and Attendance Benefit. Learn how to receive over $24,000 per year from the VA towards long-term health care. There is absolutely no fee associated with our assistance to the veteran, the widow of a veteran, their families, or any retirement community. Our goal is to preserve the dignity of the veteran and to reduce the dependency on the Medicaid system. Again, learn how to receive over $24,000 per year from the VA. Contact the Veteran Benefit Project 850-380-5137. That's 850-380-5137. 850-380-5137. Look us up on the web, veteranbenefitproject.com. At the Veteran Benefit Project, we are committed to helping you secure the benefits you deserve.
Retirement expert Andrew McNair. Changing the retirement paradigm. Now back to what your money would say. Brought to you by SWAN-Capital.
Welcome back to What Your Money Would Say. If you're just tuning in right now, we have Justin Beck from Beck Properties, and we're going to talk about real estate as an investment. And as an investor, how you can add that to be part of your portfolio. Now, this is kind of against the grain right now, is when it comes to real estate from the financial advising side, I'll tell you my personal story and my kind of personal beef with my own industry. I got started at age 14. I read a book called Rich Dad, Poor Dad, which highlighted real estate investing, which real estate investing is not for everyone. But it burned the passion for me for not only real estate investing, but for investing in general, and that's why I went into the field I am in. But when I got to financial planning, financial advising industry, and I started asking about real estate investing, they kind of shoved it away and said, well, that's something you can do, but that's not something we do. And that really turned me off from my own industry, because I said, think about all the investors, think about all the families and the retirees that want to invest in real estate, are curious about investing in real estate, but don't know where to turn. And their financial advisor is supposed to be that person that, they can bounce ideas off of and give them really sound financial advice. So as a retiree, if you have some real estate investing questions that have to do with your total portfolio, give us a call on the radio at 478-3116. That's 478-3116, and we'll take your question live here. on What Your Money Would Say. And the reason I'm going to go back to the personal story is that it made me mad, and I understood where the financial advisor was coming from. Is they didn't want to give advice because that was not part of their licensing and that wasn't part of their education. But it does have to do with their whole financial portfolio as a client. And the second reason, probably the most important reason why they pushed it away and didn't talk about, your broker never talks about real estate investing, is because they don't get paid to do that. They don't make any commissions or fees when they tell you, that's a good real estate deal. You should really look into that more. They don't get paid to do that. So you want to take that idea and that perspective and you really run with it, because not all the times is what they're trying to advise you is the best for your plan. And also, a lot of families come to me and they say, we're so heavily invested in stocks and bonds, and they think they're diversified because they have a mutual fund. They own 300 companies, U.S. companies. But what happened in 2008? What happened was they were diversified. They had 300 U.S. companies, but the whole U.S. market went down. See, if we had other investments and we had a full investment portfolio of 24 different asset classes, including real estate, which suffered in 2008, but other asset classes, they would have been offset a little bit, and they wouldn't have suffered the 30% losses, the 40% losses. So in retirement, you need to own a little bit of everything. Now, the key of having a professional is helping you determine what percentage of that little bit of everything you need. Again, we were talking off the mic, me and Justin, about a college, and that when I was getting a finance degree at UWF, there were some textbook things that they talked about in college saying, the age 100 rule. If you've ever heard the age 100 rule, they say, if you're age 60, that means you should still have at least 40% of your portfolio in stocks and bonds. That's why it's nice to have a professional that says, no, 40%, that's too much. You're taking too much risk. So back to real estate investing. Justin, you've dealt with a lot of real estate investors out there. Tell me your experience with that. I mean, have some been pleased, some not?
Sure. Well, the most successful real estate investors that we've had the chance or the opportunity to work with are ones that are probably similar to the type of investors you've had. They have a very long view of things that they buy and they hold. We say in real estate, time cures a lot of ills. So quick flips in real estate, that's a very speculative business.
Sure.
I don't advertise it. It's a tough one to do because you're really guessing. You're really trying to time the market. So having that long view is super, super important. And the other thing is investing in I personally believe in income producing real estate, meaning a shopping center, something with leases, something that's generating revenue on a month-to-month basis. I think that's a huge benefit, especially for a retiree, because it has that ongoing income that they need.
And you've probably lived the real life examples where families invested in real estate and they hoped for that appreciation that never came.
Right. Right.
Whereas if they had the income, they would have some income coming every month.
Yeah, and with the income, if you have to borrow money to buy that property, you've got a tenant helping you pay that mortgage. So that's huge.
Which is building the equity for you.
Absolutely. So you don't need the appreciation quite as much. You're building equity as you go.
Well, Justin's given the good segue into the give me's and the gotchas of real estate. And for every investment out there, they all have their give me's and their gotchas. So what we want to do is kind of highlight those for you. I want to go with the cons. Bad news first, right, Justin?
Right.
The first con of real estate, as adding that to your portfolio, is its illiquidness. It's not something you can just say, here's $100,000, but I need that back in 30 days.
Yeah, I mean that's that time kills or time fixes all ills. I mean, because it is an inherently illiquid asset, so you really have to make sure that you've got enough liquid assets. And I believe, Andrew, diversifying that portfolio.
Absolutely. Should have 6 months of liquid expenses.
Right before, yeah, and so don't buy any real estate if you don't have that. That's a huge piece. It is illiquid. It's not always illiquid, but a lot of times it is. So plan on that.
So you want to be careful with that.
Absolutely.
The next one is the money trap. Now these are the stories that you hear about your great uncle that lost a lot of money in real estate because he bought a money trap. He bought something that he expected would be $20,000 to rehab, and then he would lease it out and make an income from it, and it took more like $80,000 or $100,000 to rehab it. So I'm sure you've experienced that.
I think the the big way to avoid that money trap is to do your due diligence. It goes back to hiring professionals. Even though I'm in the business and I'm a professional, I still hire other professionals before we buy something. Have a great real estate attorney. You need to have a clear title on the property. You need to have maybe an environmental assessment done on that property. That can be a huge money trap if you've got some environmental issues. So making sure you do your due diligence before you sign on before you go to that closing table, and that's going to avoid a lot of money traps. Get a good contractor in there and get you some estimates. Generally, when I've seen that, when people end up just pouring money into a property and not seeing the returns, it's because they didn't do their due diligence.
Sure. The next one is kind of an expectation or a mindset. The property may do fine, but they don't. The retiree that invests in real estate never feels comfortable with real estate because they went into the expectation that it was going to be like a stock or it was going to be like a bond. They just put their money in and let it ride. You can't do it that with real estate. Someone's got to actively manage it, and that's the difference between real estate and other investments is passive versus active management. It's an investment that needs help and needs the help to be pushed forward. But your organization can help out with that, Justin, right?
Yeah, absolutely. And I think, Andrew, you have kind of two extremes on real estate investing. You could help your clients buy a stock in a REIT, and they don't have to do anything, and they could technically be invested in real estate. They could buy it themselves, and they can own and operate it themselves, and they're going to, owning one property and managing it. What we try to do is help people get diversified in their real estate investments and maybe own a few properties. We help them manage it, and we have certified property managers on staff. They'll help you budget for the property, help you understand your tax bill, your insurance, all those sort of things. And so year over year, let you know how you're doing. Take those calls too, those late night calls that nobody wants to get. We take care of those. So it'll help you understand, be that liaison, be that advisor in between, say, a contractor and you when he's saying the water line's broke or we got to clean out your septic tank. Say, I've seen this before, and no, you don't need to do this, or yes, you need to do this, and it's fair. Get multiple quotes and stuff like that. So
yeah, and even with my own real estate investments, I could probably manage them, but I have a property management that does that because I can leverage their relationships. They've built a whole, group of professionals that can handle my issues, and they, again, as Justin says, they can deal with those issues. So. If you're just tuning in, we're here at What Your Money Would Say with Justin Beck and me, your host, and we're talking about real estate as an asset class. And if you have some questions about the real estate market or real estate investing, give us a call on the radio at 478-3116. That's 478-3116. Now, we're going to switch from the cons of real estate investing to the pros. The first one I like, this is always fun because you can put your feet up, is that you can live and enjoy real estate. It's one of those tangible assets. People like gold because they can feel it. Well, real estate, you can see it. With your stocks, your bonds, you can't sell on the back porch of your 401k.
Right.
But real estate, you can actually enjoy it, or your business can enjoy it and get a lot of traffic from it while you still build equity.
I like to say you can drive your mother-in-law by it. You can look at this, So
you feel proud about your investment.
Proud of it, yeah. Absolutely.
It's not as nice as here's my portfolio. Here's 8 pages. Here's what I bought, and you see it growing, and you can make repairs. So that's a really great pro about real estate investing. The second is diversification. We briefly talked about this. When you have stocks and bonds, that's one thing. They're correlated, but also real estate is a whole different diversification that adds another depth to your portfolio. And the most important for a retiree is income. And real estate offers that. It helps you have the income that you need in retirement. And I want to thank Justin for coming on the show because, he pointed out how real estate has its advantages and it also has its disadvantages. And as a retiree, you need to make sure that you have the income you need in retirement as well. And real estate can help you do that. Again, if someone's out there, a retiring business owner, how can they get a hold of you, Justin?
Well, they can go on the web, www.beckpropertyco.com, or they can call us at 477-7044.
All righty, you heard it here. We'll see you next week on What Your Money Would Say.
Break this down. It's Take Rush Limbaugh to Work With. WCOA Pensacola.com and 1370 WCOA Pensacola.